I am pleased to welcome to the program a guest who is joining me for the very first time, Lior Gantz. How are you, Lior?
Great to be here, man.
Thank you for joining me. And of course, Lior, you are the founder of Wealth Research Group. You were a millionaire in your 20s, and you've been writing about and making various extremely accurate predictions in the world of cryptocurrency for some time. Can you give us a little bit of background information on yourself before we get underway here?
Sure, and let me first correct you that I didn't hit the seven-figure mark until my 30s, but
I apologize. But congratulations, that's still good.
I tried, but I couldn't do it. A little background. I think my story with regards to wealth with investing, it kind of hit me when I was 13 because my father's business went bankrupt, and I felt helplessness on my part because I was 13, right? Sometimes the phone bills weren't paid, or the electricity bill wasn't paid, and we got darkened for a few hours in the house, and it just didn't sit right with me. And immediately, age 13, I looked for a job. Now you don't hire 4'11" or what we call 150 centimeters people to jobs that easily. So what I did was I went to a clothing store, and I hung around at the clothing store for about 2 hours a day for about 2 weeks. And I just proved to the owner that I know a lot about the brands, the clothing, etc. And finally he hires me because he sees that I can sell. On one occasion, a woman came into the store, and I was able to upsell her on a few things just by standing there and complimenting and doing stuff. So he hired me for a full pay of $4 an hour, but it gave me confidence, and it started my asset accumulation phase. Because age 14, I started marketing my babysitter services in my neighborhood, and telling people, those same parents, that I can coach basketball to their little kids if they want, because I was playing myself. And by the time I was 16, I had like 20 grand saved up.
Wow.
And yeah, so I ended up putting it in my bank account, and I got my parents to sign a waiver so I can invest those funds as a minor. And yeah, so my grandfather hands me two books, one from Peter Lynch, and the other one is a book about Warren Buffett. And I read Peter Lynch books first, and it talks about, actually, and this is the best performing hedge fund managers of the 80s. So from 1977 to 1990, for 13 years straight, he compounds the Magellan Fund at 29.3% a year, which is, just imagine, it's 50% better than Warren Buffett.
Wow.
So we're talking every investor that just held with Peter Lynch, even a small amount, he became a millionaire. So Peter Lynch talks about the fact that stocks are businesses, and when you buy a stock, you partly own. Yeah, that's right. So One Up on Wall Street is the book, and the second one is Beating the Street. I haven't even read the one that's called Learn to Earn. So I read the first one and the third one. So anyways, in his book, he talks about the fact that stocks are businesses, and when you buy a stock, you actually buy a piece of a business, a real business. So you've got to buy stuff that you own, that you understand, that you know. So, and he talks about the fact that his teenage daughter actually picked some of the fund's best performing stocks, like Dunkin' Donuts and Coors, which was like a basketball card. You would collect these cards of players in the 80s for the NBA. People don't do that anymore that much. But anyways, it made it real for me, made it doable. I understood that I can do it if I can find companies that I understand. And remember, I'm working in the clothing store, and then I read Buffett's book, and it talks about investing in brands and the power of a brand, because a brand is able to maintain loyalty of a customer and be more stable. And then, secondly, if there is inflation or there is competition, a brand is able to increase the price of goods without losing a lot of customers to the competition. So merging both of them, I started investing, and the first stock I bought actually is a stock that I still own 18 years later. It's up over 2,100% since then. And it's a company that fits the bill exactly to these two books, because it's a clothing manufacturer. It's the largest manufacturer of apparel in the world, yet it's a very unknown stock to most people. So I imagine you haven't heard of the name of the company yourself, but you have heard of many of the brands that they own, because it's an umbrella company that owns many of the most powerful apparel brands in the world. So anyways, that's kind of how I started with investing. And then from there, I segued into Napoleon Hill books, and I learned about entrepreneurship and businesses, and I just got hooked to saying, hey, I'm unemployable. I need to run my own business, grow my own business. And Napoleon Hill is really the person who taught me that I need a partner in order to succeed, or partners. And that's where I started my career as an entrepreneur. So taking both things together, I started the businesses, which I knew I had the skills to be able to excel at, and I invested the savings wisely. And about 2.5 years ago, I decided that this is an opportune time, or a great time in my life, to kind of pass on the baton and take everything that I've learned, because I've read hundreds of books, and I've actually implemented what I've read in books and started my own businesses, invested for myself, and for a time for a boutique fund that I started with very few large, well-to-do clients. And I said, look, I want to reach a bigger audience, and that's how Wealth Research Group, which is a free financial newsletter, came about, because I wanted to basically give people a library and a way to enter my mind and share my research and share my ongoing insights as I keep developing in life myself, because I'm 34, obviously, and I plan to be around for many more years.
It's a great story, Lior. And of course, your newsletter, Wealth Research Group, was the first to cover Ethereum in March of 2017, when it was worth only
to my knowledge.
Right. Worth only $12 at the time, and then it rallied over 8,500% by September. You've become quite an expert in cryptocurrency, but as you gave us that background there, which was very comprehensive and impressive, thank you, it seems that cryptocurrency sort of flies in the face of this investment strategy of brands and building customer retention and all that. Cryptocurrency is rather mysterious compared to known brands, and we don't even know who this Satoshi Nakamoto, if it's a real person who created Bitcoin, is. Can you talk a little bit about how cryptocurrencies differ from traditional investments from your point of view?
Definitely. So I see that you're sharing the website. If you go to the special reports tab on the main menu, it's sort of a wealth library of special reports, PDF reports that people can download. One of those downloads is my personal asset allocation portfolio. And so my strategy, Jason, is to concentrate the lion's share of the portfolio in well-known brands, what I call dividend aristocrats, which is a group of 52 publicly traded companies out of thousands and thousands in the world that have unique characteristics, and you want to simply make sure that you follow and watch them over time and invest when the time is opportune. It's called juiced up. It's exactly what you're looking at right now. If you're looking at the 2018 portfolio. But anyways, so that's what the lion's share of the portfolio. Now, when you do that, you get predictable returns, predictable annual returns, which is called investing. Investing is the art of creating scenarios where you have predictable rates of return, whereas speculating is the art of finding the right management teams, the capable management teams, and making asymmetrical bets. So taking small sums of money with the potential of turning them into life-changing returns. And therefore, in any portfolio, whether you look at the biggest hedge fund managers or the most professional private investors, they have a certain allocation for their big ideas. It could be 5%, could be 3%, could be 10% of your entire net worth. It just depends what you do with the rest of it to hedge the risk that you're taking. But if you do it wisely and you focus on the people that run these enterprises or the people that head these ideas, then you may find asymmetrical bets that you can make. And Ethereum was such. So you take a small sum of money, you can take $300, $400, $500, $600, and you make 8,000%. It becomes big money, right? Because you make 80 times your money. So it just depends on how you build your entire portfolio. There is room in a well-structured portfolio for small cap opportunities or for cryptocurrencies opportunities, or in 2018, for example, cannabis opportunities. On September 5th, just 2 weeks ago, we covered our top-rated beverage company for millennials. It's a company that we covered at 20 cents Canadian 2 weeks ago, Jason. Mm-hmm. And it rallied to $1.05, a 550% return in 2 weeks.
Wow.
And so these companies exist, and what you need to do is stick with the management teams. It's like building a house, right? You build the foundation of the house, it takes forever. You furnish it takes a day or two. So the way you find these companies is you focus on the management team first. What is the leadership? What is their track record? How are they able to build business successfully, serially, over time? And then look at their current enterprise. What are they doing right now? So,
wow.
And that's how we got to Ethereum, by the way. We looked at the person who is behind it, and we researched it. We went to conferences. It takes time, obviously. It took us about 2 months to really get our hands around what Ethereum is. Obviously, it's not $12 anymore, so it's not a bargain anymore, and it's not a speculation anymore. It's much more known. So we are looking at other sectors of the market right now. But the important thing is that we do it asymmetrically. So this is not where you build wealth over time. This is where you speculate and make life-changing returns when they are available. So not every year you'll have these moments. It's not like they're all the time everywhere. And that's important to remember. Cryptocurrencies was in 2017 was a unique year. You don't have this every year. And so you shouldn't expect that exactly without.
So let me ask you briefly, you're talking about the management teams, and you selected Ethereum, I presume in part because you evaluated Vitaly Buterin and found him to be a guy that you wanted to invest in. Is that correct?
Yeah, and there are co-founders as well, but yes.
What about, because you see, Crowdsource the Truth is not generally focused on financial research. We're more interested, or I should say, my audience is more interested in things that are not generally covered in the mainstream news. And as such, we get into some rather esoteric topics. I've done quite a bit of research with an individual named Quinn Michaels, who had pointed out that in the case of Ethereum and many other cryptocurrencies, we see players behind the scenes like Peter Thiel Did he come into any of your research with doing your background on Ethereum?
Well, the way that 2017 was laid out was that this was a trade where an asset class goes from obscure to popular. And so what we wanted to do is we wanted to make sure that the cryptocurrencies that we cover have the opportunity to enjoy that theme of going from obscure to popular and trade that rally. We don't hold cryptocurrencies as a means of a long-term investment. Cryptocurrencies do not pay yield currently. They have regulation issues. There's many topics that we can elaborate on. And so what we looked at is this a great speculation or not? Is this a great speculative idea or not? And not whether or not this is the next Coca-Cola that we can own for 40 years and enjoy compounding and dividends. So it's the same thing we did with Monero that we covered $19 and it went over $400, or Dash that we covered at $30 and went over $1,000.
Wow.
Yeah, or we covered several of them that had massive gains. Litecoin, I spoke and interviewed Charlie Lee when Litecoin was $20. It went over $350. So there was massive gains to be made in 2017, but I don't think this is the future of cryptocurrencies in general. And the name cryptocurrencies, Jason, is also misleading because many of these projects have nothing to do with currency. They're not about to become currencies, or they're not even aspiring to become currencies. They're just tokens of companies. So this word has been misleading as well to many investors.
Right, and it seems like so much of it is not well understood, not well documented, not even necessarily organized in a traditional sense where we have a product launch, we know who the principals are, what their background is, etc. So many of these things are anonymous. As you said, there's dubious regulation in this field. And most recently, there's been quite a downturn in a lot of the most popular cryptocurrencies. Bitcoin at one point was over 19,000, and right now we're seeing it reported at 6,651. Ethereum is, I mean, we just look at these charts, it's taken quite a dip. So you've said just now in our conversation that you don't necessarily expect cryptocurrencies to be an investment of the future. Let's talk a bit about the financial crisis of 2008, how you see cryptocurrency in terms of it being a response to that, and do you expect, is this the type of thing that you would even speculate about? Is something like that 2008 crash coming? And what can, people who aren't necessarily investors but are concerned about their income, their financial stability, what is the advice that you would have for someone like that?
I think the next crisis would have nothing to do with what happened in 2008. So in 2008, what we saw, leading up to 2008, what we saw is excess of leverage in the system. And so 2008 was a huge deleveraging moment. The financial institutions, the insurance businesses around the world, banks needed to deleverage. When the entire financial system, the fiat monetary system, needs to deleverage, there is only one institution in the world that can absorb the deleverage and leverage up himself, and that is the federal government of the United States and the Federal Reserve Bank. So when the subprime mortgage crisis infiltrated the entire scope of the financial system globally, trillions of dollars were deleveraged. And therefore, when you have that sort of a situation, if you just let it occur, it can topple the entire financial system. You're talking hundreds of thousands of people would be out of jobs. And I'm sorry, not only out of jobs, but they won't receive their salaries. Their companies will go bust. you'll have a situation where you will be pushing the risk of social disorder. So if the government would have not intervened, which is an option, right? In a free market economy, you can say, hey, we want zero intervention by the federal government. We want perfect capitalism. And if people made mistakes, they should pay for them. And more capable people will come along, buy these banks at liquidation prices, and build a new system. This is all good and well, but to the eyes of politicians, there are more ramifications, and that's what they took into consideration. What will happen socially in the United States, a country where there are 450 million guns and 320 million people? What would happen if hundreds of thousands of people will be out in the streets tomorrow, no savings, no assets, out of jobs, and you would have a situation where there's a huge problem. So they were backed into a corner where they decided, hey, the only thing that we can do to stop this immediately is to inject capital back into these failed institutions. And the other route was obviously to inject capital into the upside down citizens who had problems paying their mortgages. So they had a few options to weigh, but the most immediate way to solve this crisis was to inject capital into failed institutions. And what it did is created a wealth gap inside the United States that has never been here since the 1930s, since the Great Depression. Because what they did was they levered up financial assets, which made the recovery personalized or in pockets. So in other words, the people who had cash and people who had assets were able to recover by 2011. Most of the millionaires, multimillionaires, and billionaires of America had risen to pre-crisis wealth by 2011 or 2012. When you have the most powerful institution in the world backing your ass when you're making trades, you will become wealthy. And that's what happened. So to the millionaires and to the asset owners and to the corporations, this strategy, this tactic that the federal government and Federal Reserve took with the QE programs, with TARP money, with buying bonds,
sorry to interrupt,
etc.
but QE, for people who might not know who are watching, quantitative easing is just printing more money, right?
It's not exactly printing more money. It's extending credit to the federal government and to the commercial banks, so they can get their reserves up. It differs from helicopter money, which is just fresh printed money, or just creating currency out of thin air. QE is kind of different. It revolves, buying bonds from the federal government, expanding the Federal Reserve's balance sheet. But what it does is create credit. It increases the purchasing power of the institutions that enjoy it. So it would be like somebody coming into you tomorrow and telling you, hey, I'm giving you $1 million to work with here. It gives you better purchasing power. Now, when they do that to a segment of the population, that segment enjoys that effect, especially if you give it to them with zero interest rate. So imagine you get $1 million tomorrow at zero interest rate. All you need to do is buy $1 million worth of 10-year treasuries, and you're making an arbitrage because you just got free money. You're just lending the federal government at 3%. You're going to make 3%. So to these corporations and to these institutions and these individuals who have financial assets, who have real estate, commercial, residential, etc., the recovery happened real quick, and they enjoyed the recovery. But it created a circle, right? A wealth circle for the rich and for their children and their families, because they now get to have more money to give their kids for education. Their kids can go and explore better job opportunities, and on the flip side, you see about 200 to 250 million Americans who are struggling
Yeah.
because the recovery did not occur for them. The Federal Reserve's and the federal government strategy did not impact them, did not trickle to Main Street, as they like to say.
Right.
So they're sitting there and saying, okay, hold on, 4% unemployment rate, that's good, but I have 3 jobs here. So where's my, I'm working, but I have nothing to show for it. If I get canned, I'm 2 weeks from being broke at every time.
Right.
God forbid if something happened to me on a medical front, I have no emergency fund, I have no savings, and job opportunities that the upper middle class and their children are privy to. I can't. I don't have the money to go to college and get into a high-paying job in 21st century America. I'm stuck in 20th century America in low-paying jobs. My industry or my profession is getting outsourced or is getting displaced by automation, etc., and I can't get retrained. And therefore, you see an economy that national stats do not apply to. So when you say, hey, the recovery is going great, here are some stats for you. These are stats that are when you take one hand and you dip it in hot water, like scorching hot, the other one in ice water. On the average, you have moderate water, right?
But getting burned and frozen at the same time.
Exactly. So this is what's going on in America right now.
Wow.
There are rich people, and they're gonna keep enjoying this 21st century America, where they can invest in multinational companies that have most of their operation abroad, and they don't depend on the U.S. economy to a great extent. So just imagine, even McDonald's, 65% of the revenue comes from Europe and Asia, right?
Wow.
Yeah. So when you are an investor or a business owner in America with an exposure to international markets, then the recovery happened fast for you. But when you rely on domestic environment, then you have a problem. And so what's going to happen is the banks and the government do not trust each other right now, because the reputation that both of them have is that Wall Street and the government have colluded to screw the people in 2008.
They've been doing that forever, haven't they?
Exactly. So that's the main thread, right? So when the next crisis comes along, politicians and bankers would want to immediately separate themselves from each other and say, hey, we can't be seen to be colluding. And so monetary policy, which is what the Federal Reserve does, which is slashing interest rates, buying bonds, creating all sorts of money policies, will not be as important as fiscal policy, which is governmental policy during the next problem, the next recession, the next crisis. So as we approach the next presidential election, what you'll see in America is that the wealthy and the poor are very divided, and the government will be the one that has to solve this time more than the Federal Reserve. So the Federal Reserve role will be minimalized, while the government will have to come up with strategies. If the Democrats win the next election cycle, then you'll see a huge infrastructure boom. They'll have to create jobs, sort of what Germany did in the 30s, right? With building, bridges and roads and just putting people to work.
Hasn't Donald Trump said that that's a component of what he wants to do? Focus on infrastructure? It was. And if the Democrats win the midterm, I expect it to start kicking into high gear. But as a Republican, what he first wanted to do was slash taxes, which is a very easy way to stimulate the economy, jolt the economy, because you essentially create a situation where everyone has more wealth in their hands, more discretionary income, from corporations to individuals. And so that can stimulate the economy, and it did. All of the S&P 500 companies have reported record guidance, and
obviously you see the stock market at record highs, but it has a 12 to 18 months effect. So once that's over, he's going to need to think about other strategies that he can implement. Otherwise, the economy is reaching maximum capacity. You can't keep hiring people, because productivity is maxing out. These companies are at record margins, record revenue, and the only way that they can increase revenue and increase productivity is by either laying off people or raising prices on the consumer. So you're going to be in a situation where there's going to need to be a slowdown soon. When that slowdown occurs, think about the 250 million people who haven't even experienced the recovery of 2008, and they are rolling into the next recession. They're going to start saying, hold on, capitalism does not work for us. And so that is the birth of populism. We saw it in the 30s. They're going to ask the government to intervene even more. And then ideas will start floating about what the government can do. But what I think will happen is the government will need to start getting into austerity measures, which is another way of saying that they will make it more difficult for people to receive their Social Security benefits. They will have new stipulation on your Medicare, your Medicaid. For example, they would say, okay, so the age is now 68 or 69, and postpone it. Or to Social Security recipients, they would say, hey, you would need to show a pay stub, so you can retire essentially if you want to receive your Social Security. Remember, all these things are fluid and fluent. These are not set in stone. So the idea of Social Security came to be during the industrial era in Europe, where politicians said, okay, now I'm not getting voted by aristocrats. All people have voting rights. How can I convince people to vote for me? And they just started saying, hey, when you're 55 years old, we will start paying you a pension. Now, obviously, people didn't live to 55, so their statistics were in their favor. Now people live, 80, 85, 90 years old. You can't keep paying them for a third of their lives. Benefits. It just doesn't work that way. So they will need to start tackling this during the next election cycle. No politician wants to do it. So the best thing to do is to wait for a crisis, because people are more open during a crisis to extreme measures. If you tell people when everything is booming right now that, hey, we need to start cutting on your benefits, it will not go well, because the stock market is booming, real estate is booming, unemployment is very low. Optimism is at record. Well, it's not a record high, but it's at a 18-year high. So you don't want to start creating policies that hurt people while they are having a good time and feeling the wealth effect. So,
but if I'm not mistaken, I'm detecting a bit from the way you're talking and from the sound of what you're saying that you're less positive on the economic outlook than perhaps President Trump is. Do you think he's doing a good job so far?
I think that America, the U.S. economy is going through a situation. Not that it hasn't dealt with many situations before and survived them and thrived through them, but what they're going through now is a situation where a quarter of the country is retiring. So the baby boomers are retiring, and the millennials, which are a bigger demographic group by a few million people, so they're a bit more than a quarter of the country, they're entering the workforce. And they will need to inherit those high-paying jobs that the baby boomers are leaving behind them. So the next decade will see a great boom for the United States, for the private sector. But the federal government is insolvent. So there are two economies that you need to consider when you talk about the U.S. The federal government, which has a $21.5 trillion federal deficit, national debt, and $1 trillion federal deficit, and they need to think about what they do with their debt situation, because as they keep asking the rest of the world to fund their deficit by buying treasury bonds, the rest of the world will say enough is enough. They'll increased interest rates, they'll demand higher interest rates, and the dollar might even lose its reserve currency role as other rising powers start to rattle the boat, right? Like China, which will have a bigger GDP than the U.S. in about 7 years. So by 2025, more countries will want to do business with China than they want to do business with the U.S. because they'll be able to make more money with China than with the U.S. Fast forward 10 years later to 2035, and the defense budget of the Chinese will surpass that of the United States. So you're looking at a clash between two powers, the existing empire and the rising power.
How can you draw the conclusion that the Chinese defense budget will exceed that of the United States? Isn't it currently like 50 times higher, the U.S. defense budget?
It is, but you look at the UN projections for these stats, and they are pretty much as accurate as they come. So obviously,
this is a hugely interesting topic, and I'm sorry to interrupt you, but I do want to remind everyone that you can get all of these great insights, amazingly, for free from wealthresearchgroup.com. This is Lior's website. He's publishing a free newsletter that, he obviously is it's a great story that you're telling, Lior, because I think a lot of people can relate to this concept of, their families go through hard times. You went and got a job, you saved your money, you did a lot of research and reading. Nobody sprinkled any magical fairy dust on you or anything like that, threw $1 million at you. You built all of this yourself. And I'm really interested in what you're talking about now with the US dollar as the reserve currency, United States military spending. I want to talk to you about something that I don't even know if this is within your area of research, and if it's not, we can move off it. But one of the topics that first interested me was this concept of the petrodollar that was created by Henry Kissinger and Richard Nixon in this sort of unholy alliance with the Saudi Arabian royal family and subsequently the rest of OPEC. When Nixon moved the U.S. off of the gold standard, $1 was no longer backed by $1 worth of gold, but rather by the worldwide demand and basically this forced policy of every country having to buy and sell oil only for dollars. In 2018, we've seen China come at us with the petro yuan. In 2002, of course, Saddam Hussein attempted to sell oil for euros and quickly met his demise. We saw Muammar Gaddafi try to champion an actual gold currency in the African dinar, which he intended to be a competitor for the dollar and the euro on the world stage. We know what happened to Gaddafi. What can you say about the role of the petrodollar and some of the turmoil in the Middle East and the ongoing impact it has on U.S. foreign policy, or such a strong alliance with a country like Saudi Arabia, who seems so opposed to so many of the things that the U.S. holds so dearly in terms of values?
So it's a great question, and it's important for people to understand what credit and debt are. So when you extend credit to a debtor, you basically increase his purchasing power. Now that's a good thing or a bad thing, depending on what he does with that credit. I'll give you an example. So in 2009, right after the crash, I landed in Phoenix, Arizona, and I started buying real estate because America was on sale. So what I did was, once I ran out of purchasing power of my own existing cash, was I leveraged credit from other people. So in America, you can buy properties where the owner of the property can be the bank for you. He can carry a loan for you. In other words, he transfers the title to you. Now you become the owner of the property, and you pay him a down payment as if he's a bank. And the rest of the purchase price, the rest of the contract between you and him, you pay over time in increments, in monthly payments. Now, what you do is, for example, if your property is rented for $1,000, then you make sure that your monthly payment to the owner is about $500. We're talking principal plus interest. that gives you enough money to pay your management company, to pay the sewer and water system, and still have a positive cash flow. So in other words, every month your tenant is the one who's paying for your purchase, and you're creating a situation where credit and debt work for you, because over the years, all you did was pay the down payment, and now you own a house free and clear that is in positive cash flow.
But isn't that highly dependent on the renter being able to pay the rent every month? And isn't that exactly what happened when the subprime mortgage crisis hit?
Sure. So you don't go into bad areas. You do your research and you stick with areas that have good tenants. So, for example, with this particular property I just mentioned, I've owned it since April of 2010, and I've had it's 3 units, so it's a threeplex, and it never had a vacancy.
That's great.
And obviously it's an unusual situation. Many properties, when you even think about the calculation, you take into consideration about 2 months worth of vacancies a year to give yourself some leeway. But getting back to the point, what happens in 1944 is through the means of the World War II and its results, the U.S. gets the role of being the world reserve currency. Now, that role made the dollar pegged to gold. And when you peg a currency to gold, you create a situation where it's hard for a government to extend credit or to get into debt, to leverage up. But the U.S. had to, decided to go into Korea and then Vietnam, and it had to use credit, and it didn't increase its purchasing power. Its purchasing of gold reserves, and so that unit of account, that 35-to-1 ratio between how many dollars are spent and created and how many gold bars and gold ounces are in reserve, that went out of whack. Now, the rest of the world, France in particular, in the 60s said, okay, I want to see an audit. I want to see what you have. And so Charles de Gaulle, the president of France at the time, said, I want to see how much gold the U.S. has. If it doesn't have the gold, I don't want to hold dollars. I want to hold gold in my reserves, in the French reserves. So in 1971, to avoid an audit, they had the current administration back then, Nixon and Kissinger was obviously a key person there. They decided that they must create a situation where they avoid this audit. So they terminated the 35-to-1 convertibility of dollar to gold. They said they would do it temporarily, but it ended up being a situation that's 47 years later, we still live under this floating currency system. But the pressures that were ascribed to them forced them into this situation. Now, some people have called it the petrodollar system because one of the biggest buyers of the U.S. debt is the Saudi Arabia, the Saudis basically, and what the U.S. enjoyed throughout about 30 to 35 years was an easy way to get oil from Saudi Arabia by creating more and more credit, more and more debt in the form of a U.S. dollar, because other countries are forced to accept dollars for international settlements of commerce. So imagine this: 6 out of every 10 currency units in the world are dollars. 6 out of every 10 units of currency in the world are U.S. dollars. It's an international currency. 50% of the world's currency, 50% of the world's dollars are outside of U.S. soil. So it's a highly international currency. It's a highly global currency. In 2012, with the invention of and the progress of shale oil, the U.S. is now the world's largest exporter of oil. So it doesn't need to keep importing oil from Saudi Arabia.
Right.
And so that game has changed, and obviously the Chinese are privy to this, so they're creating a situation where they can start using oil, which is the world's largest commodity, in yuan. So they simply want to create a situation where their currency would be widespread, just like the U.S. dollar is. But there's a long road for that to happen. Only 1% of the world's currency is yuan, the Chinese currency, whereas 60%, 60 times the currency is in U.S. dollar. So,
but Lior, isn't there also a component where some sort of fairly secret deal was made between the United States and Saudi Arabia that compels everyone not just to get a good deal on buying oil from Saudi Arabia with dollars, but to force everyone doing any transaction in oil to accept and send dollars only? Is that not a component of it?
Well, certainly, being the reserve currency is the greatest power that you can have. You can almost decide on the amount of deficits that you want to have and just spend. No other country can decide, hey, I'll pay Social Security, Medicare, Medicaid, defense, education. I'll pay the people, I'll subsidize whatever I want, and the rest of the world will suck it up and buy our debt. So the U.S. Needs to protect, quote unquote, this privilege by sanctioning countries that are trying to escape this. And obviously, when you're talking about big countries, you're talking the way that they solve problems is by war. So if they see a problem that they can't solve otherwise, they send the military.
Right.
So,
and it seems that there's, I mean, perhaps this is my view of this, and maybe it's incorrect, but it seems to me that there's some degree of bullying going on, where there seems to be a proactive effort to go to some of these, countries that could be strategic problem areas and preemptively destroy the leaders and take over the countries that aren't on board, as we saw with this totally unfounded connection between the attacks of September 11th and Saddam Hussein and creating this war in Iraq that now went on through Libya, and we're hearing all kinds of things about Syria, and Russia, of course, is in there, and there's this whole question of, are we somehow trying to wrestle control of this natural gas pipeline away from Bashar Assad and basically flood the American people with false news about gas attacks that seem improbable and unfounded by evidence to create this justification for war there. It seems to me, based on reading Hillary Clinton's emails from WikiLeaks and things that she was communicating with John Podesta about, that the United States was most interested, with regard to Syria, in making that pipeline available for Saudi Arabia and Qatar. And many people have also speculated about people like Dick Cheney having Genie Energy and certain arrangements for oil discoveries in the Golan Heights and things like that. I don't want to get too much into that, but for me, it always comes back to this petrodollar thing and this concept of controlling oil and controlling money all over the world, sometimes with bully-like tactics.
Well, oil is how you control nations, and food is how you control people. So these are two very important things, and to politicians, to people that wake up in the morning and their brains are thinking in terms of control, these are things that are worth fighting for. So they instigate conflict and they fight for it. They in the same way that you would fight for your children, for example, doing everything within your own power to help them. They have their own agendas, and obviously politicians make money from all sorts of ways that we don't know, right?
Yeah.
So these are control freaks. I mean, what's new? The politicians are politicians. the second they open their mouth is the second you know they lie. So
Well, perhaps this is idealistic of me, but I sort of hope that by 2018, with the vast communications technologies that we have and the relative ease with which people can go from one area to the world to another, which even only 50 or 100 years ago was a vast journey, now might
Sure.
take just a few hours and a couple of $100 on a plane ticket. I sort of hope we could collectively move towards a world where maybe we're working together rather than attacking.
We are, Jason. I mean, look, the world as a whole is getting much wealthier and much better, but certainly we're not there yet, right? It's like a chef cooking preparing a cake, right? And he's only halfway through. Now, the half that you're seeing looks horrible because it's not done.
Right.
But he is progressing. Now, think 200 years back. Think of the killings, the murders, the rapists, the saloons, the taverns. Think back to even further. I mean, as long as you go back in history, we're making a lot of progress since the cavemen, right?
Good point.
So things are not perfect, but it doesn't mean that they're not progressing. In the last 30 years, we, as a planet, we almost eradicated extreme poverty. So people still think in terms of, hey, people are making $2 a day and they live in these tents, but most of the world is not there. Most of the world is developing. Most of the world is at $30, $40 a day. Yeah. So this concept is you need to really research what's going on in the world today, and you will understand. Look, I've traveled to 45 countries. I've been to a quarter of the planet. I haven't been to many of the most extreme, African countries and Central American countries that or South American countries, Asian countries that have extreme poverty or are stigmatized with extreme poverty. But a great book to read is called Factfulness, and it's one of Bill Gates's favorite books, and it just deals with great facts that people should know because they're walking with 1960s data in their minds instead of 2018 data, like you say. So this is a great book. Yeah, Factfulness. Yeah, 10 reasons we're wrong.
Bring that up.
So, anyways,
so people can see it.
Sure. Let me see that I got the name right.
Yeah, you did.
Okay, cool. So yeah, exactly. That's the book. So, and the author died last year. But anyways, great book. And all I want to tell you, Jason, is that politicians or anything, any discord that you've seen in the world right now is also an opportunity. So, you can make a lot of money and you can succeed by solving discord. That's what happens in the world. You bring value. You create businesses and you invest in businesses that deal with how to solve discord and how to bring value to people. So we are the plan, right? We're the people that make it up. So complaining about what's going on is sort of, what do you want to do about it? As an individual, you can only lead by example, and the best way to lead by example is just to succeed on your own, and hopefully that inspires other people to succeed. But there really is nothing else that you can do. You can sacrifice your life and try to do a crusade, but those seem to fail. I've read about quite a few that have failed. So the best thing you can do is live your life to its fullest extent, and to understand that you live in an imperfect world, and what you can do is what you can do. Just do your best. I personally have never voted, for example, because I don't think that I think that's the best choice.
Huh.
With regards to the people that are in politics right now, I don't think that they are the sort of people that are capable of improving situation. For example, you know what I mean? So I just choose not to vote. If
But
all people
yeah, if all people did that, we'd be in trouble. Would you
exactly.
say you
So
have an
what I'm
overall
saying is,
positive outlook for the Donald Trump presidency and how people in America and the world at large will hopefully benefit from that?
could you repeat that because you were
Would,
cut
would
out
you
for
say
half of it?
would you say you have an overall positive outlook for Donald Trump's presidency, and do you feel that the people of the United States and hopefully the rest of the world can benefit from things he's doing in North Korea and elsewhere around the world?
I think the best thing you can do is not to care who the president is. The president, who the president or the prime minister is, had nothing to do with anything I did in my life. It's irrelevant to me. I need to focus on businesses that work right now, and on investments that work right now with the situation, with current circumstances. So, to me, it's irrelevant what's happening in politics to how I live my life, and I am always optimistic, but I think the United States is becoming a specialized economy. Now, let me explain what I mean by that, if I may.
Yes.
So, a specialized economy is an economy where professions mandate that you be an expert in performing them. All the mundane professions are going to be gone, or they're not going to need as many people
Driving a
to.
car or whatever.
Yes, you would need to be a specialist in what you do, or you will be displaced. Once you're displaced, which is to say that your profession is shrinking to a point that you're not needed at some point, you would need to be retrained. Now, with that said, it could be disadvantageous for companies, for corporations, to retrain you, where they can retrain an Indian person.
Or someone
right?
younger or whatever.
Exactly. So, at some point, the government will need to come in and change the way that they educate the youth, and change the way that they give a social safety net to displaced people, because while a perfect capitalism is the vision of some Americans, right? The free market economy, the government does nothing, and everything is private. You would run into a situation where it could result in such desperation from certain factions of society that you would have higher crime rates. So there's always a balancing act on how you want America and your country in general to behave. You live in a society where all people are not like you. So even if you're very well educated, it doesn't mean that everyone else is. So you need to consider and contemplate and be compromisable on how you want the rest of the people to live inside of this society. Because remember, your businesses and your lifestyle also depends on them functioning as well. Imagine going into Starbucks and everyone's pissed at you, everyone's late to work, the windows are shattered from because yesterday there was a burglary, right? So even if you're very educated, it doesn't mean that you don't live on your own on this planet. So
it sounds like you're describing Charles Ortel on a Sunday before he arrives here, sitting in Starbucks and everybody's pissed off.
Well, I just
I'm
came up
joking,
with
of
it
course.
on the spot, but
I'm joking, of course, Lior.
um,
I appreciate your insights and your positivity and your positive outlook. I definitely want to remind people that they can log on to wealthresearchgroup.com, and it's amazing that you've created this totally free financial newsletter. People can get information, and I can see you have my friend Lynette Zhang here featured on the web page. Is Lynette part of your group? Or is this just a video you've linked here?
we also have a YouTube channel, and so Lynette was interviewed by me
Got it.
a few days ago. So
Uh-huh. She's great.
Wealth
I
Research
really
Group
like
also
Lynette.
has a also has a podcast, and Lynette and I chatted. I'm going to be featured on her show in a couple of days here.
Wonderful. And so people can find Wealth Research Group on YouTube just by, I'm sorry, I should have had that channel up.
Well, if you scroll up on the website, you can find a YouTube button on the right
Perfect.
top.
I think I've got it
Or
popping up right here in just a moment. There we are, Wealth Research Group on YouTube. So if people want to hear more from Lior, you can log on to his YouTube channel and you can subscribe to Wealth Research Group on YouTube. You've got a ton of great advice, lots of good experience. I see you've got a video here about Tesla. I'm curious to hear your insights about Elon Musk smoking weed with Joe Rogan, but I'm afraid we're out of time for today. Lior, I hope you'll come back and join me in the future. Thanks so much. Is there anything you'd like to say in parting?
well, I think the best way to stay current with what I'm doing with insights on my investment principles, etc., is to subscribe to the newsletter, because we don't post on the website all of the exclusive things that we do for the subscribers. So it's just worth mentioning that best to stay current that way, and it all goes to your inbox, obviously. So it's
Wonderful.
much easier.
That's great. Well, again, thank you, Lior. My guest has been Lior Gantz, and it's been a pleasure speaking with you, sir. I hope we have the opportunity to speak again soon. Enjoy the rest of your day, and I want to thank everyone for watching. I'll see you tomorrow.
Thank you, Jason. Thank you, sir.